Nigeria's president gives approval for the Nigerian National Petroleum Company Limited, NNPCL, to pay for petrol subsidies using the company's 2023 final dividends, even as NNPC declares record profits. What does this all mean for Nigeria and its oil sector? Good day, it's another power-packed episode of Business Week. This week, friendly banter turned full-on spat between Nigerian and South Africans threatened to disrupt ride-hailing services, while remittance inflows into Nigeria see a significant increase. In Ghana, the country commences a $12 billion oil refinery project, and U.S. Fed Chair Powell says it's time. Time for what? You're probably wondering. Well, stay tuned for that and much more. I'm here to help you catch up as always. If you couldn't keep up during the week, I'm Rolake Akinkunmi-Fulani. As always, we're going to take a look at global energy commodities to start with, and we'll take a look at Brent. All the major commodities, with the exception of natural gas, were down at the end of the week on the back of good news from the Fed saying that rate cuts will begin from September. Brent was up 2.24%. WTI crude in North America, of course, up by 2.38%. And RBOB gasoline was up by 1.32%. Let's now take a look at global equities markets around the world, starting, of course, as always, with Nigeria, our home country. All share index on the exchange closed the week up by 27 basis points, ending the week at 95,973.45 points. A fair amount of deals at 7,000, a little over 7,000, 327 million shares traded, a value of 4.6 billion, and market cap at 56.12 trillion, a little higher than last week's market cap. Let's take a look at equities markets, starting with Africa. Johannesburg and Casablanca and Morocco were the big winners this week, but Ghana was relatively flat. Some big announcements in Ghana. I'll talk about that a bit later. And of course, Nairobi was also down by 19 basis points. Now, the big one this week is Wall Street. All the major Wall Street indices this week finished in the green due to the hawkish, well, now more dovish move by the Fed. Jerome Powell announcing that rate cuts. It's time for rate cuts. Dow Jones Industrial Index was up by 0.69%. Then you have S&P, which was also up by 0.63%. And finally, the NASDAQ Composite Index for tech stocks was up by 0.87%. Now to my top picks of the past week. Let's take a look at the wall. The first major story here, which I talked about at the top of the show, is the fact that at the annual Jackson Hole Symposium in Wyoming in the US Fed Chair, the most powerful central banker in the world, is saying that it's time for rate cuts. And of course, that's on the back of data the US has been releasing around jobs. Jobs growth has been slowing down a bit, and there are concerns there, but obviously predictions of recession not materializing. Nevertheless, we will see rate cuts from September. Some analysts are predicting as high as 50 basis points. So we'll be on the watch. But the reaction around the world, we saw a significant rise in equities markets, as well as significant inflows into short-term money market funds. Everybody gearing for rate cuts in the US in September. We'll be watching that story closely here on Arise. And now Singapore, the new Prime Minister of Singapore, I believe his name is Jackson Wong, has, under his government, introduced an unemployment support scheme that will see those in the lower and middle income brackets receive a little over $4,000 a month for the next 6 months in unemployment support. Now, this is a major policy shift in Singapore because since 1965, when the founding father of Singapore, Lee Kuan Yew, was in government, he's always said he doesn't believe in a welfare state, or welfareism as he's called it, and Singapore has never had job seekers' welfare or allowances. So this is a real departure from tradition in terms of Singapore policy support. That scheme will continue for 6 months. Not too surprising, though, in some respects, because we've seen a slowdown in key indicators. Manufacturing growth in the first quarter of this year in Singapore wasn't so great, but nevertheless, it's still a model economy, if you like. So good news there for those in lower and middle income brackets in that country. Nigeria's Securities and Exchange Commission has said it is going to start licensing crypto exchanges. Yes, you heard that right. We've seen a growth in adoption across board, but the regulators are finally taking back ownership and control of this market by introducing a framework for licensing crypto exchanges. Of course, major hits to global crypto exchanges around the world since 2022, when we saw major crypto exchanges in the spotlight around concerns around fraud. And some of these founders were even jailed. Earlier this year, Nigeria shut down the Binance platform, one of the biggest crypto exchanges in the world. And of course, two of its key principals were imprisoned in the country. That news kind of still ongoing. But here, the regulator is now saying we will license exchanges who will have to play according to certain rules. Now, in our opinion, it was only a matter of time, always when, not if, before this regulation was finally announced. Now, Ghana has commenced a $12 billion refinery in the country. Is it Dangote fever taking on across Africa? Ghana already has two refineries, the Tema Oil Refinery and the Central Oil Refinery. Tema does about 45,000 barrels a day at full capacity, but has faced some operational challenges. Now the government has entered into an agreement with a consortium of other companies, including a Chinese construction company, to build a 300,000 barrel a day oil refinery. Ghana, like many West African countries, is dependent on petroleum imports for consumption. I think 90% of its imports come from outside of Ghana. And of course, the West Africa region also consumes a huge amount of petroleum products from outside the region. So this is all part of regional government's move towards self-sufficiency insofar as energy consumption is concerned. Will that refinery see the light of day? We're already seeing some disputes over land usage across that refinery. We'll be watching that closely, of course, here in Nigeria, because it resonates very well. And speaking of oil, NNPCL has declared record profits in its entire 46-year history of net profit for 2023 of 3.3 trillion naira. That's a 28% rise from the previous year. Now, NNPC has been in the spotlight throughout the entirety of this week, and we'll be talking a little bit around the subsidy controversy later in the show. But in some ways, this is great news, because over the last 3 years, NNPC has been declaring profits, which as a private limited company, well, that's what you're meant to do. The company has plans to go to the public markets in the future, and so its corporate governance will, of course, be in the spotlight. We'll be talking about that a bit more later. That's it for my top picks for the week. Now, let's take a look at some other top stories from around the world. The Nigerian National Petroleum Company Limited has been given permission by the country's President Bola Tinubu to use the final dividends that are due to the Federation in 2023 to pay for fuel subsidies. To further improve NNPC's financial flows, Tinubu also approved stopping the Federation's 2024 interim dividend payments. NNPCL told the President that it is presently unable to pay taxes and royalties into the Federation account as a result of the subsidy payments, referring to the situation as a subsidy shortfall or FX differential. The Central Bank of Nigeria has reported a significant increase in remittance inflows of $553 million in July 2024. The figure represents a 130% increase from what was seen in the corresponding period in 2023 and represents the highest monthly total inflows on record, according to the CBN. The inflows reflect ongoing efforts by the CBN to enhance liquidity in Nigeria's foreign exchange market. Ride-hailing app Bolt has blocked an undisclosed number of accounts for requesting fake rides and cancelling them after a driver accepts. The company has also restricted inter-country ride requests to curb a trend which has mostly involved Bolt users in Nigeria and South Africa. On Thursday, several accounts on the social platform X posted screenshots of the trend where a Bolt user in either Nigeria or South Africa would request a ride in one of the countries and then cancel it after the driver accepts. U.S. Vice President Kamala Harris is calling for raising the corporate tax rate to 28%, her first major proposal to raise revenues and finance expensive plans she wants to pursue as president. According to James Singer, a spokesperson for her campaign, the senator will advocate for a corporate tax rate of 28%, describing it as fiscally responsible ways to put money back in the pockets of working people and ensure billionaires and big corporations pay their fair share. Saudi Arabia is pushing ahead with its emphasis on domestic investment, which entails stricter regulations for visitors from other countries who wish to withdraw their money. The The kingdom's headquarters law, for instance, mandates that foreign businesses operating in the Gulf locate their Middle Eastern headquarters offices in Riyadh in order to be eligible for contracts with the Saudi government. The law went into effect on January 1. With the recently amended investment law, Saudi aims to draw in more foreign investment as well. By 2030, it wants to have attracted $100 billion in FDI annually. The Nigerian Ajib Oil Company, NAOC, was successfully acquired by Oando plc for a total value of $783 million from the Italian energy giant. With the completion of the acquisition, the company said in a press statement that it is a major step forward for Oando's long-term plan. Return of the asset and compensation for it are both included in the transaction. Oando's position in Nigeria's oil and gas industry is anticipated to be strengthened by the acquisition, which would also increase its operational footprint and upstream capabilities. Botswana has discovered the world's second-largest diamond, a 2,492-carat jewel uncovered by Canadian mining company Lucara Diamond. The Financial Times claims that the weighted diamond unearthed is the greatest gem quality found since the Cullinan diamond, discovered over a century ago and eventually integrated into the British crown jewels. Mining accounts for nearly 25% of Botswana's GDP, so this discovery could offer some relief to a sector impacted by the rise of lab-grown stones. Still in Southern Africa, South Africa's inflation dropped more than expected in July, falling to within touching distance of the central bank's target and cementing analysts' expectations that the bank will cut interest rates next month. The country's statistics agency data showed on Wednesday that headline consumer inflation fell to a more than three-year low of 4.6% year-on-year in July from 5.1% in June, whereas analysts had forecast annual inflation of 4.9% last month. The South African Reserve Bank likes to see inflation around 4.5%, the midpoint of its 3% to 6% target range, but it has been below that level since mid-2021. Well, that's it for our market roundup.